Hey, it's Dan Prochka with My Pocket Marketing. Thanks for joining me again for another episode of Road to Open. Today, we're doing an episode in the evening. My guest today, another longtime friend, is a small and mid-sized enterprise turnaround and growth expert. And so as he consults with businesses, he's really at it working hard during the day. So it's the only time he could do it. And I'll give you a deeper intro in just a second, but want to remind you that all of our episodes get announced through our email list. So if you'd like to be reminded, definitely recommend you head over to mypocketmarketing.com/join. We'd love to have you part of these conversations, get your comments live, ask my guests questions, have some banter back and forth. Always a good time. But we are going to jump in pretty quick, like we always do. So would love to introduce my guest tonight, Roman Yako. Like I said, he is a turnaround and growth expert. He's been taking Fortune 200 best practices and working with small and mid-sized enterprises to customize and simplify them for their world. So how you doing, Roman?
Good, Dan. How are you? Thanks for having me.
Yeah, definitely. Where are you at right now? I know you travel quite a bit.
I'm in Williston, North Dakota.
North Dakota. Where were you before that?
I was in Poughkeepsie at the beginning of the year of New York.
That's it.
I've been up here since middle of March, just before the shutdown, and have basically continued traveling back and forth. Although I'd spend a couple weeks up here before I'd go home. Normally, I go back and forth every week, but that's been less than fun. So I decided to not do that. With the flights getting cut out, it's taken me almost 8 hours to get home sometimes. So I'd just rather not bother.
Right. Now it's actually interesting because you have been continuing to travel and work with businesses through the pandemic. So you started this consulting. I mean, you've been doing this way back since like 2007, but most recently traveling a lot more. And it's been interesting hearing how things have changed and what's happening across the country. You've seen a really good cross section. I know a lot of businesses are scared. We've heard reports of over 100,000 have closed already. And in your experience, since you've been doing this before the pandemic and now during and traveling, has there been like a common thread that you've experienced with these businesses as to some of what they struggle with?
Yeah. And in fact, part of the pandemic, what the pandemic's done is actually accentuate some of the problems where before some seasonality or temporary increases in revenue have kind of hidden one of the biggest issues that I see small business struggle with, which is cash management, has just been sort of devastating because what is usually a longer cycle has just turned into a very short, 8 or 12 week cycle where they went from having revenue to, in some cases, zero revenue.
Yeah.
And you hear all sorts of statistics about your average small business only has about 2 weeks of cash on hand. And my experience is that that's 100% true.
Actually, on that note, CNBC did a survey with small businesses, and they found that about 45% of them said that they could probably last a few months without the economy opening back up. But hearing reports and having my clients actually feel, the loss of revenue, like you said, as much as 75, 80, even 100% for a period of time while still having costs, I can see how it would accentuate the issues that small businesses face. So when you say cash flow, you're saying like that's the biggest issue that you're experiencing or that you're seeing.
Yeah, it's the one that is really causing much of the heartache. A lot of businesses, I would say most small businesses, don't really have a decent cash flow management system in place. Okay. If they're lucky, they have an accountant who might at the end of the month give them a cash flow statement for the money that went out over the last 30 days or 3 months or whatever that cash flow statement is. But they have no idea how much money they have coming in. Most of them manage their cash flow through their bank account. If there's money in it, they pay bills and they kind of decide, and they're hoping that next week it replenishes. It's one of the biggest stresses that they feel. they have maybe some idea that they collect invoices in about 30 days, but they're not sure. What I usually find is that they think it's 30, but it usually turns out to be more like 50
So
days.
I want to jump into that just a little bit more. I mean,
Yeah.
we talked about this as we were prepping, bank account balance, finance, or I don't know what term you want to give it. But when you say cash flow, what exactly do you mean? You just kind of alluded to it a little bit of, they don't know how much they have, 30 days, 45 days. So what does that actually mean? And how does that translate to a small business?
So in most cases, you try to, you do work, and you invoice that work, or you have sales that you're expecting to come. I think the easiest way to look at it is if you're using the idea of invoices. You issue an invoice, and that money is supposed to come in 30 days or 45, whatever the terms are of that agreement. However, your bills for doing that work are due today or also in the next 30 days. So if you buy something for me today, you may not have to pay me for 30 days. And I probably have some expenses that won't be paid for 30 days. Mm-hmm. And the idea is that as soon as that money comes in, a portion should be used to pay expenses, and what's left over tends to be profit. And a lot of businesses who don't know, for example, when the pandemic hit, everybody started to pay their bills slower. So they didn't really understand what the impact would be on their cash. So suddenly the bills are due, they have to pay them, the bank account dwindles, but they won't see that money for another 2 weeks. And in an up economy where revenues are increasing, those next sales just keep covering that gap. But eventually that gap has to come to fruition. And when during the pandemic, suddenly your revenues went to zero, I maybe had 4 weeks of money that was coming in from business I had done in the past, and then it's gone. But my bills continue to accumulate, and I have to continue to make those payments.
Yeah, we were talking a bit about it in the sense of, let's say in a healthy economy, just being slow on accounts receivable, which is, the money you're owed. It's never fun to do collections. We know that. It's not, but it's a necessity sometimes. Hopefully you have great clients or customers that, all pay on time. But we were talking about how, bills are due every 30 days, like you were saying, but maybe we have terms that are net 45, meaning we allow 45 days or 60 days, or we're just so lax that we let our invoices just sit out there for a really long period of time. And so what that means is we're spending money from the future, but taking longer to collect it. And so it's like, it's not there. And so if you do it by, what were you saying? The bank account balance, if you did it by that, you're not realizing that you have all of these expenses coming, but you're not going to get your revenue because they're way back here because you're just really slow on getting to it.
Yeah. I mean, what you want to do is you want to actually take a look at your invoices and say, okay, here's how much cash I expect this week from certain invoices. Here's how much cash I expect next week and the week after. And then you try to match up your expenses so that when that money comes in, I can pay those expenses. And if you're in a healthy environment, you tend to be able to do that. It's just one of those skill sets that business owners just never learned, and accountants aren't really, that's usually not the engagement agreements that they have. They're usually there to do their taxes, maybe do their bookkeeping.
Yeah.
Maybe tell them what happened to their cash, but they're rarely are they telling them, here's how you should plan. And then on top of that, you want to add any debt payments you have. You have payroll, you have credit card payments that you're making. And so you get into this trouble where suddenly you're literally borrowing Peter to pay Paul, as the old adage says. So if you can't manage your cash flow, and I recommend we start on a 13-week basis. One of the things we do is we get all of our clients, we have a big spreadsheet and a system that we use in order to schedule every invoice, every payable, when all the payroll is, any recurring payments that come from there. And you can map it out over 13 weeks and you can exactly look, oh, in week 5, I'm going to be short on cash. So maybe I can push this invoice off a bit. Or I got to call some of my clients, and instead of them being 60, 70 days, and I've seen some doozies. I've seen people have been owed $100,000 that's beyond that is past due 6 months. And no one really knows, or there's an excuse, they're a good client. We don't want to offend them by asking for money.
They're a great client. They're so great they haven't paid for a year. Yeah.
I said, how great of a client are they if they're not paying you? Well, they've
Right.
been with us forever. Well, they haven't been paying you forever, and they're actually taking advantage of you. I'm going to be honest. I call that stealing, but
It's a good
sometimes
term
that's what
for
it
it.
takes.
Yeah. Yeah. I mean, really what they're saying is I like being friends with them, but
That's
we're not in business
right,
together. That's really
right,
what they're saying. Yeah.
right.
Yeah.
Or they're taking
And
advantage of me, or their business is awful and they don't know how to manage their cash, and so it just kind of spirals over and over to the point where if you're well, it's a big trend now is to do factoring. You have people running around in
oh yeah.
manufacturing that banks that are basically saying, look, I'll pay you for that invoice today with a little haircut. And so they keep reaching further and further ahead. So eventually that gap of what we just talked about was only 2 weeks ends up being a four week, 6 weeks. I've seen as much as 3-month difference. So suddenly your revenue goes to zero during the pandemic and you don't have any money coming in for 3 months, but you have every single bill that you've accumulated over the last 2.
Yeah, factoring. Break that down just for a second. We're talking about basically a loan, right? Or is the institution that's giving you the money taking on that debt and trying to collect?
Yeah, it's a little more complicated, and we probably don't want to get into it because it gets boring. But the fact is, you're basically being loaned the money that is rightfully yours 30 days from now, and you're taking a haircut on it. And then if, by the way, they don't collect it, they basically send it back to you and take the money back anyway.
Okay, so note to self: don't factor from those friends that never pay you.
If you're factoring, you have to get out of it as quick as you can,
so
because you're just killing yourself.
This cash flow issue that you talk about, I mean, part of that is why the PPP had to exist to begin with. At least this is how I'm seeing this a little bit. One is, I mean, revenue stop immediately. So I don't have anything to pay. We want the economy to keep going. We want employees to have an income to spend in the economy. I get why the government politicians did that. I don't want to get into policy. But if a business understood their cash flow, I guess part of my question is if they understood that, how would that have affected potentially their need for PPP and or what that would have allowed them to do?
So it's a great question. And the PPP was really designed because they knew that revenue would come to a grinding halt. And they assumed that a lot of businesses would do what most businesses do, and that is immediately start laying people off. It was designed to kind of bridge an 8-week period because they figured that all this would be over by then. And so if you had had a good cash management system, you would have immediately understood what your obligations are in the next 13 weeks, how much money you have coming in. You'd get a good sense of how much money you're going to need. But what's really an underlying piece of a good cash management system is the reserves that you are building. Most businesses don't have the reserves sitting in a bank account collecting interest for exactly those times when they need to bridge those gaps. And so they end up borrowing money. The easiest way to get money today is a line of credit, and they tend to max that line of credit out because they treat it as a loan. Suddenly you have to make loan payments, and the thing just balloons over and over to the point where you just find yourself constantly worried about how you're going to make your next payroll, your next utilities bill, your next rent bill, and then it turns into the owner taking less money, or you have owners who don't realize that and continue to draw money from the business because they need it for personal reasons, and they just keep depleting that bank account until one day it's gone. And it's fine when you have a trickle of invoices coming in and a little bit of business. You can bridge that for a really long time. You'd be surprised how you can continually maneuver things for 12 months sometimes. But when suddenly you go to zero revenue, literally overnight, the clock starts ticking, and it's a matter of days, sometimes weeks.
Depending on how well the company had set themselves up before hitting that, before they hit that mark. Yeah. And so that's not saying there's no political statement here. I think the PPP was needed in a lot of different situations for a lot of different organizations. Could the blow have been less, and could we have saved some of those 100,000 businesses plus that have closed? Yes. Now, to have a great cash flow system, I know like we had talked about 3 big areas that were really the big issues right now as to why we were seeing so many businesses close, why there was such a big impact. And really, like you said, it was like a magnifying glass. The pandemic hits, the lockdown hits, revenues go to zero. These three issues are issues whether or not the lockdown happens.
Correct.
And so the three that we talked about was cash, having good data, and accountability. And I know you have been, I mean, those came from you.
Yes.
So I know you're saying correct, but like, I just want to remind you, we talked about this and we were both in total agreement here. Came from you. So as you've been going around, like when you, to be able to put the cash flow analysis together, you have to be able to grab that data. Are you seeing the businesses have those capabilities, or is this some of that deficiency between your accountant team, finance team, and leadership?
So, most businesses know what kind of invoices they have. They tend to have a decent invoicing system. I think the issue with respect to cash really is all related around their inability to forecast it or not really understanding what it costs their business. So the fact that they know what their invoices are, they have a decent monitoring system for that in most cases. I think when you talk about the data, it actually goes way beyond just being able to find out what your payables are, what your bills are, and what your invoices are. It's really understanding what it costs to run your business. One of the things I find absolutely amazing every time I go into business, I ask for a P&L. What I sometimes get could be as old as 3 months. Sometimes it could be 6 weeks. But in my view, I need to know what happened last month within days of me finishing. Let's say we're about to end June. I would love to know by June 5th, 6th, July 5th or 6th, what June looks like, because I can still act and make changes and adjustments. But if you're getting your data 30 days, 60 days later, it's too late. You've already burned through all of those issues that you potentially had. And the other thing that I find is, because you have your MBA, so you understand what managerial accounting is. But that is one of the greatest lessons that I can give any business owner is you have to have your revenue, you have to have your cost of goods sold, and then all of your fixed expenses. And if I have my cost of goods sold, I understand what it cost me to produce the product. So cost of goods sold is that which is directly related to the selling of my product, to keep it simple.
Yeah.
You'd be surprised how people tell me, oh, I'm making 30, 40% margins on my services. But when you actually crunch the numbers and look at the data and re-look at it the way that where you put all of your direct costs where they should be, they're always surprised that their margins are always lower.
Yeah, like 5%, 10%. Wait, no, I thought it was like 40.
I hate to tell you, Dan, it could be negative in a lot of cases.
I'm sure.
They're literally, when they sell a product, are attaching an additional dollar onto that product and sending it out the door. And the reason that their accountants aren't really giving them that data is really twofold. Actually, no, I think there's only one. Is because accountants are really focused on doing your taxes, and all they're interested in is putting the right number into the right boxes. So a lot of times I see chart of accounts are set up to make life easy for the accountant. They're not really designing the chart of accounts to be helpful for operational purposes or for managers in the business. And that's what we mean by managerial accounting. So if you don't have good data captured in your books, you have no idea. And I say that with total sincerity. You have no idea what it costs to run your business. And that's even before you get into how they handle credit cards and the fact that those costs aren't assigned and you're not matching revenue with costs. But now we're getting into accounting talking and
yeah, and that's not really the part of this episode either.
No.
Yeah, I mean, one, it sounds like, okay, vet your accountant, and if you're doing it internally, vet who you're hiring to make sure they understand what you're looking for. Hold them accountable, which is what we're going to talk about in a second. Yeah. But two, whoever you're hiring, to do either your bookkeeping or accounting, do they have the capability to be that, to do that managerial accounting, to be the manager, to be proactive, to help analyze and
I'll even go a step further. Is you want to definitely vet your accountants, but also, one of the biggest things I find is that you kind of just fall into a bookkeeping role. Someone who happens to be there, who kind of learned how to use the numbers. Rarely do I find someone who's truly a qualified bookkeeper running the books. And so they may have learned from someone there before, or the bookkeeper leaves and they just put someone in, and they kind of learn the the transactions. They know which buttons to push, but they don't understand why they're pushing those buttons. And the whole system can derail very quickly if you're not on top of it and really keeping track of all the basic things that you need to from an accounting perspective. And once you've done that, you can no longer find out things like what is the price of my product done over time. With data, I hear a lot of opinions, right? But I can't eat on opinions. So what I need to understand is what really happened to your price, to your volume, to your mix. What really does it cost to produce your product? Again, there's a little saying, and I can't say it here, I don't think, or I won't. But opinions are plentiful, but none of them are ever backed up with real facts.
Right. Really what we're talking about, though, is the lag of decision making. And so, when you were talking about if the books are done every 3 months, basically you're letting 3 months go by before you make a decision. Even if
before you realize, not even decision, before you realize there's a problem.
Exactly.
It'll take another 3 months to actually decide to think about fixing the problem. I hate to be critical, but these are things I see all the time. They bury their head. They're worried about today's problem. And, it's kind of goes to number 3, and we can get there in a minute, but or we can transition if you'd like. But it really gets down to the idea that the owners tend to be so in the weeds, worrying about all the different daily tasks that need to happen, that no one really is watching the business of the business or managing the business of the business. And that's an entire different skill set that if I could wave a wand to fix all the things that ails small businesses, it would actually be to just make everybody now a competent business manager. And that's a skill you have to go get. Just because you opened up a store one day and decided to go into business for yourself because you were unhappy with somebody that was your boss, doesn't excuse you from going out and learning some of the basic things. And there aren't that many. There's just some basic things that
so we're
one
here.
of them is cash management.
So we're here. Okay.
The other one is getting the data, and meaning your books are in order and accountable. And then the third is understanding and learning how to actually hold people accountable for the results.
Cool. So we're gonna shift our focus real quick so we talked about all the problems. We're going to talk about solutions. Before I do, those who are watching, thank you for joining. Would love your comments. I see our friend Loy is actually in the comments right now. Ted Franges, thank you for joining us. Any questions for Roman, myself, would love to field them if we can. And just want to let you know, you can leave them either on Facebook or YouTube, wherever you're at. We're going to see them over here. But so we talked accountability, and I know the issues we just mentioned. So cash flow, making sure you have access to the data, it's put into the right format for decision making. And accountability is this really interesting piece because it is something you have to go experience and learn and get. It's not something that usually comes naturally to a lot of people. We hate to hold ourselves accountable. And I know one of the things that you've talked about, and one of the things that we employ here at My Pocket Marketing, is an operating system for our own business. And so was hoping you might be able to share a little bit about your thoughts about how a business could use that to get these 3 items in place.
So really, the basis of a system, right, especially a business operating system, is and there's various definitions, but sort of in the very simplest form, it's a process. It's processes in place that help you make decisions, implement those decisions, and then hold the people accountable for getting those results. So from an accountability perspective, for example, to keep it really simple, every business should have an org chart, and every org chart should have a very clear set of line of communication, who it is that's responsible for your work. So if I have a supervisor, only that supervisor can prioritize my work. Now, you might have someone who comes by and asks for something or asks some really good questions, and I can help them get the information. But at the end of the day, they shouldn't be able to tell me to go do something. And you see this in businesses that have 2 or 3 owners. Each of the owners will run around to each of the employees throughout the day, having different conversations and then set up different priorities. And this person has no idea what they should be working on. And so having that I call it single point of accountability. Who is responsible for the books? It is the bookkeeper. The bookkeeper reports up to the CFO if you have it, or the owner. And they then make decisions and then give their marching orders back down. In an operational environment, it's a COO or a owner has to tell a shop floor manager, and then that manager will make sure that we achieve certain things on the floor.
That's really interesting. What would you say about organizations that are like, look, we want to be flatter. We want to remove all this up and down.
Yeah.
It's not efficient.
Yeah.
It's getting in the way. If
Yeah.
this person can just go there and get it done, we're going to save money. We're going to make more, and it's going to get done faster. We're going to be innovative. I mean, I think you have an opinion there is what it sounds like.
Yeah. Every business that's ever told me that after we implement an actual organizational chart with single point of accountability tells me how their entire lives have changed 180 degrees.
What do you change? How? Like, did they have more focus? They have clear.
The owners run around less. They micromanage less. They have a lot more free time. The business becomes more efficient. The revenue tends to increase because along with those single points of accountabilities is setting really specific goals that says, I need X number of dollars of revenue, $10,000 of revenue a week. And every week, because you have a single point of accountability, there's only one person responsible. If you are looking at, and so every week they have to report, hey, I didn't get that much revenue. Well, why not? And this is where the questions start coming, and you'll appreciate this because you're a data guy, right? How many calls did you make? Well, we only made 30 this week. Well, how many were supposed to make? 50. Well, why do you think that your revenue went down? Well, because we didn't make 50 calls.
Yeah.
So
best part is most times I ask that question, it's like, I don't know how many I made, you know?
Right. Well,
Yeah.
that's good data. You have to, we didn't even get into that part of data. We stick on the accounting size. But if you really have good data, you're tracking every activity that is being done in the business to see what its relationship is to the results that you want. And so if you have single point of accountability in an org chart, you now know who to hold accountable for certain aspects of the business. If my overtime is going through the roof, if my cost of labor is going through the roof, there's only one person responsible for that. Ultimately, you're right. It is the owner, the CEO, the COO, whatever it is, but they have a system of people below them, again, the system of people below them where they can delegate and then manage the results that are there. So by having an accountability structure, which is the org chart, you can now actually hold people accountable for cash management, for the data, for the operations. In fact, I like to use, and this isn't mine, it's probably been true about every business before, there's only 3 things that every business does. And yet that is, you have to go get the business, fulfill the business, and then count the money. So if you have 3 different responsibilities, you cannot be responsible for all 3 of those.
Right.
You need to build processes that can function on their own. In fact, I'll go a step further. Under each one of those 3, you actually have to make decisions, implement decisions, and then make sure you get results. So do the math. That's 9 things that if you want a flat organization, mostly the owner is now completely responsible for doing. Because usually when they mean flat, they mean everyone reports to me, the owner. So now there's 9 things the owner has to be responsible every day. And if you spend 2 hours a day on each one of those 9, you're working 18-hour days.
Yeah, so, I've been in organizations where they've been hierarchical, they've gone flat, and then in the end, what did we do? We ended up going back to somewhat hierarchical because of confusion. And to this point, Ted has a good question here that I'm going to throw up for us here. Do your org charts contain more than the role, i.e. duties? I don't know, Ted, maybe if you want to drop a reply comment as to what you mean about more than duties, what else would go in an org chart? I'm drawing a blank. I don't know what you think there, Roman.
Really, it's about responsibilities. To that level within the organization. And I actually know Ted really well. So thank you, Ted, for dropping that for me.
You make a good point there, because it's not about duties. It's about what they're responsible for.
Yes, you are a supervisor. You are an accounting manager. It kind of leads into having good job descriptions. What is it that you are actually responsible for? And it changes. Each organization can be different. A COO, not all CFOs, for example, let me go there. not all CFOs are only responsible for the books and for the accounting. It is often pretty common for a CFO to be in charge of IT as well as for human resources.
Yep.
And you roll that up because your organization isn't ready to have an executive level human resources person. So you have to clearly define not only the reporting structure, meaning that single point of accountability, but you also have to clearly define what it is that they're accountable for. And that's a great point, Ted. So thanks again for
one of the
that our way.
one of the rules I've always gone by is anything that you put on an org chart as a responsibility has to be measurable. There has to be some deliverable you can measure to it, because otherwise it ends up being there's confusion, ambiguity.
Right back to data. And by the way, when I say single point of accountability, the best way I explain that is if I have two people responsible for one activity or for one outcome, you're going to get this.
Yeah, they point at each other. Totally.
Point at the other person, and therefore it never gets done. So I always say if there's two people responsible for something, it will never get done.
Yeah. There is a interesting quote. It comes from a movie, really sophomoric movie, Dodgeball. The main character has a quote that's like, "I find that if I don't have any goals, I'm never disappointed." Which is a funny line, but at the same time, I think holds a lot of truth when it comes to a lot of businesses and owners that I run into, those who have issues on the accountability side. Usually they don't have a vision. They don't know where they're going. And so for them, it's even difficult to identify what I should hold people accountable to. Yeah. How do you work with organizations on that front?
It's hard. It really requires behavior change. And part of what you're talking about really stems from the fact that most of these people have worked in that business for a really long time. So in many ways, they've become almost family. And so now you have to hold someone accountable. And when they don't perform, you are disappointed because you feel betrayed. So it's easier sometimes not to ask the question. But
ignorance is bliss.
It is. But the problem is that then the owner is the only one suffering. They're the ones who aren't taking home as much as they should be. You don't know how many organizations I've gone to where I see that the owner is usually the least paid employee in the whole company. They're responsible for the most, but they get paid the least. And usually there's someone there, and I call this person Chuck. Chuck is the one who's been there for the longest, is getting paid the most, but does the least amount of work.
Or has the least amount of responsibility. It's really, really interesting.
They all do the least amount of work.
Oh, all around. It's just straight up.
But that's because they don't. You haven't assigned the responsibilities, and you're right. They want to simply avoid the uncomfortableness. But what I tell people is, if you want to lead, and that's what you've basically decided to do when you decided to open a business, then with leadership comes those responsibilities as well. And I think you have that responsibility to your family, to yourself, to your children. How many business owners do I know that worry about how they're going to pay for their kids' college? I said, you own this business. It's making good money, but you're not taking home as much as you should be. So sometimes if they really struggle, I was like, you know what? Maybe you're better off getting a job. At least there you can make some steady income. But all that can be fixed if you just put together an operating system that, again, forces accountability throughout the organization.
So about the org chart, still Eric Selesky here. Thanks, Eric, for joining in again. I think you haven't missed a single one of these. What's your opinion on areas you think should be outsourced versus keeping in-house? I think maybe another way to ask this is like, when you work with organizations, I'm sure they have areas that are outsourced, or aren't outsourced yet, and it's something that you would recommend. How do you approach making that decision, or evaluating it?
I mean, sometimes I guess it's a cost decision, depending on how much work there is. Like I know that certain businesses can outsource their accounting because it's not that complicated. They sell a single product, the invoices come in, they send the product out the door. So to have a full-time accountant or bookkeeper sitting there just isn't enough work because they're not managing inventory, things like that, right? A small business, especially when it's only starting out, may not have enough. So I think from my perspective, an outsource versus keep in-house is strictly a financial decision, is what is the most efficient way for me to get that. However, it is way too easy not to hold that outsourced resource accountable. And that's really important. If you're going to sign an agreement or bring someone else to work as an outsourced resource, you have to set the same expectations. What is it you're going to do? When's it going to be done? And so you can hold them accountable just like they were employees. I have a sort of an opinion, and it might be, I don't think it's political, but I don't care. That is basically, I don't know why we have W-2 employees, because all that is a way for government to collect taxes. We could very all be contractors and still run a business with a bunch of contractors, as long as we know how to hold those accountable. And they're part of an organizational structure where they know where they lie and who is responsible and who they're responsible for.
Yeah, it was political, but I understand where your point of view is. I see what you're getting at with it, is that whether you outsource or insource, bring in, the whole point is accountability, is that you're paying for some outcome is really the point here. And at any time, whether you're W-2 or 1099, it really doesn't matter. If somebody's not pulling their weight, they're gone. Like, that's the idea. You have a mark that you've been hired to hit. You're not hitting it. Like, how do we fix that? Have I been fair to you? One of the things is, have I been fair enough in making it clear to what you have to do? Have I given you the tools and information necessary to hit it? And then are you?
Yeah. So this is near and dear to you, Dan, just because I've lived in that world and you and I've spent a lot of time talking.
Yeah.
But my favorite is they outsource marketing.
They
outsource marketing because somebody's sister's brother's cousin can build a website and do social media, and they go out there and they post a bunch of stuff. They put in 52 posts, right? But they can't prove that any of that ever turns into actual sales. And so it's you got it. You and Lloyd talked about it last week. It's the same problem. So you chose to outsource because it's cheaper, but you don't know how to hold them accountable for the actual results. And so we give them the pass that says, oh, look, I got all this exposure. Well, again, I can't eat exposure. I can only eat the food I buy with the dollars that are coming in. Right. And so I think, to answer Eric's question, I think for me, it's really a financial decision based on the size of your business or the specific need, maybe a time frame that you need something done. But at the end of the day, I treat outsourced people no differently than I treat employees.
Yeah, I know Eric's in sales. I know that. And I know there's a lot of outsourced sales companies that'll do your either lead generation to get your calls booked or even help you close. There are whole organizations that specialize in just outsource sales, period, for you. And then you can just deliver. But that decision, I wholeheartedly agree. Are you going to be able to train them and effectively make those sales in a cost-effective way so that you keep that profit margin or not?
Actually, I see one of the comments Eric made when we were talking about collecting data earlier. I made the call, just didn't log them yet.
Yeah.
Right. As far as I'm concerned, if you haven't logged them, you didn't make them.
Right.
And I don't care what you said, because I can promise the world to people. So I'm with you, Eric. It's a huge problem. Oh yeah, I made the calls, but I was busy calling, so I couldn't bother to actually put a little checkbox on a piece of paper so that I can track them.
So on that note, the day-to-day tasks that one would do at a business as an employee really all kind of stem down from an overall vision. And what has been your experience with the businesses that you've consulted with, in the last, we're talking 13, almost 14 years here. Do they have that vision? Are they looking to the future and really thinking about where I'm going to be in 10 years to drive everybody together? Or is it really more of a day-to-day? And how does that impact the whole team on keeping that accountability?
That's exactly right. Going back to the whole organizational structure, right? When it's flat, you're the one who is now responsible for everything, as opposed to setting some general direction and allowing the organization below you to function in a transactional level. And you, as the owner or the leadership of the team or the management structure, can spend some time looking out into the future to understand what it is that's going on in the marketplace and how you might pivot. There's plenty of businesses that are perfectly primed for selling online, but are so mired in the day-to-day that we've talked about it, but we never got there. And that's because they don't really understand what the vision is, how much of your business is supposed to be online in the next year or 2 years. I use an analogy. I said, I can hire, or I can assemble the best sharpshooters out there who know how to, snipers, let's just call them, and I can give them the best weaponry that's ever existed. And if I simply tell them all to go out there and win the war, you can imagine what ends up happening. There's a reason why militaries have organizational structures, and why you have to have someone to tell you which hill we want to take. And it's the same thing. Business, in my view, is as much war as it is anything else. If you don't think that your competitors aren't trying to destroy you, then you will be destroyed. And you have to think that way. And you have to constantly be thinking, where is the hill that I need to take? Am I on path for taking that hill? Am I going to achieve the level of revenue next year that I set as a goal? And if you're not getting there, someone has to make those strategic decisions to make those changes. And that's a whole system in itself. Goal setting, strategic visions, that is the responsibility of the owner. So now, according to us, we're at 9. So now we've added a 10th, possibly 11th responsibility.
I think 11th, yeah.
So at 2 hours a day on each one of those, they're now working 22 hours. Eventually, something's going to fall away and something isn't going to get done. And that's when business starts to deteriorate. The entire foundation of that business will just start rotting underneath, because you are now running around giving no one clear direction. And that is critically important. And that's why a business operating system helps keep those things in place. And they're very structured. And so when things are breaking, you go fix the one thing that's breaking, not managing the 100 other things that are screaming, partially because they don't know what to do. And if you just gave them a decent reporting structure and a very clear set of roles and responsibilities, they wouldn't have to ask you what to do every time. They would know how to solve the problem themselves.
Right. Cool. So we're really coming up on time. And what we've talked about is managing cash flow, hugely important. Without that, there's no future, because you don't know how much runtime you have. 2, right. Got to have good data. 3, a way to hold accountability. And a way to solve for those, that operating system. It's a set of processes that you've documented, defined, put in place that cover everything from your finance, like, what did you say? Cash, your finance, people, data, goals, and results. If you can focus in those 5 areas, right? I
was just going to say, if you break the 3 things out, there's ability to cash, because that's the fuel for your business.
Yeah.
Number 2 is your people. You have to have an organizational structure where they understand what their roles are and what their responsibilities are. You have to have a set of goals that you want everyone to achieve, and you have to have a set of goals that you want the business to achieve this quarter, this year, next year, 3 years from now, and in many cases, I'll go 5 years. After that, you need a good set of data that'll tell you whether you're achieving those goals. And then the final one is actually getting results, insisting on those results, having regular meetings where people are reporting in how they did relative to the metrics or to the frame or to the goals that you've set for them. And so my idea of accountability is really all of these things surround this idea of accountability. And by using these 5 systems, you can hold your organization accountable for actual results that are going to pay your bills. They're going to pay you a decent salary. They're going to allow you to provide for your family. They're going to allow you to provide for your children and leave a legacy behind.
I think that's a great place to end this conversation. Where can those watching and future viewers learn more about you and get in touch?
Yeah, so romanyako.com. I have, I guess there's right now a little marketing giveaway there that talks about 33 tips and techniques.
Sure.
I'm going to be updating that more to talking about the 5 steps that we just talked about. So if they just opt into my email list, I try to send out emails. I'm not as good as Eugene Loy is, but I as you said earlier, I actually work for a company that does this work. And so I just try to share what I can with people out there. And so I try to create as much value as I can. So it's really just me wanting to help people and give them the advice I can. And I'm happy to actually entertain if someone wants to reach out and needs some help. I'm happy to to just have a conversation with them and try to help them, point them in the right direction. So I think the best way to reach me is definitely just to opt into my email list, or I think you can find me on LinkedIn. Either LinkedIn or Facebook as well. So
okay,
I do this for fun.
Well, I appreciate you coming on and sharing your experience. It's always a pleasure to talk with you. I can't wait for our next phone call.
Absolutely.
Yeah, thank you to everybody who viewed. If you enjoyed this video, make sure to give it a like, share it with your colleagues who you feel could maybe use it, or if you just think there's a lot of good value in here, maybe it's for some conversation among you. And on that note, we are still having these conversations in coming weeks. And would love to have you part of our email list. So just hit up mypocketmarketing.com/join. We'll get you there. Roman, I'm going to bring you back one last time. Thank you so much for being here. And so thanks. I don't know if you want to say something one more.
Yeah, no, thank you, Dan. It's been fun. I had a great time. And again, I want to encourage everyone, look me up, Roman Yako. It's written underneath my name there, ROMANYAKO.com. And I always love talking to business owners. So thanks for this opportunity. And we had a good time. So
yeah, cool. All right. I'll see you everybody in the next episode. And everybody take care.